Let's dive into the latest developments regarding SoFi and analyze the current market trends influencing its movement. There's been quite a bit of activity today, so we'll break down the key data points, recent performance, and factors driving volatility. Without further ado, let's get started. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi saw a price increase of 3.36% today, hitting a low of $11.55 and a high of $12.50. The after-hours session has been particularly turbulent, mainly due to geopolitical and economic factors rather than company-specific news. There were no new SEC filings or significant corporate announcements today. Instead, the stock moved in response to broader market trends. One of the major economic indicators released today was the ADP employment report, which showed an employment change of 155,000 jobs, significantly surpassing the forecasted 60,000. This stronger-than-expected data set the tone for market movements. As the week progresses, the market will continue digesting additional economic developments, including the impact of proposed tariffs and the upcoming unemployment report, which may provide further direction for investors. Speaking of tariffs, a sweeping 10% baseline tariff has been proposed for all nations. This has significant implications for trade and economic activity. Some regions are facing even steeper tariffs, 20% for Europe, 34% for China, 46% for Vietnam, 24% for Japan, and 25% for South Korea. Additionally, Thailand and Switzerland are seeing tariffs set at 31%, which is notable given Switzerland's traditionally neutral stance in global trade. However, neighboring countries like Canada and Mexico were not mentioned in the latest round of increases. It remains to be seen how this plays out in terms of trade relations and economic repercussions. This heightened focus on tariffs is introducing volatility not only in SoFi stock, but across the broader market. Companies closely tied to consumer spending are expected to feel the impact most. While pre-market and after-hours movements offer some insight, the real action tends to occur during regular trading hours when options and other financial instruments come into play. Investors employ various strategies such as buying and selling options contracts to hedge their positions and capitalize on price fluctuations. Analyzing short interest in SoFi, 197,000 shares were returned today, with 13% of the free float being shorted. This equates to around 140 million shares being actively shorted. Notably, the cost to borrow has turned negative for the first time in nearly a week, indicating that some brokers are actually paying traders to short SoFi. This unusual development suggests that certain institutional players may be anticipating a price decline or aiming to manipulate short-term movements. Options trading activity was also significant today, with 6.91 million in call options and 3.61 million in put options executed. Approximately 49% of all options trades were bearish, highlighting skepticism about the sustainability of today's price rally. Many traders appear to be positioning themselves for potential downward movement despite the short-term upward momentum. Looking at price targets, analysts remain divided. Some projections indicate an upward move beyond the 13 to 13.50 cent range, while bearish expectations suggest a drop below 10.50, with some even predicting levels as low as 9.50. With such polarizing outlooks, uncertainty continues to dominate market sentiment. Beyond SoFi, the broader economic landscape is evolving. China has already signaled retaliatory measures, including restricting new investments into U.S. companies. Given this backdrop, tomorrow's trading session is likely to be highly volatile. The impact of tariffs, potential retaliations, and investor sentiment will all play crucial roles in shaping market behavior. Technically, SoFi stock is currently sitting between two key support and resistance levels. The $10.91 mark is a strong support level and could be tested if selling pressure increases. On the resistance side, $12.46 appears to be a notable barrier. Additionally, the 200-day moving average at 11.25 cents is a critical technical level to monitor. The stock has bounced off this level multiple times, and its ability to hold above this threshold will be crucial in determining short-term direction. Another factor to watch is potential ratings updates from analysts. While no major revisions were issued today, it's likely that we'll see fresh updates soon. If notable firms release new ratings or price targets, this could further influence investor sentiment and trading patterns. A broader perspective on tariffs reveals some historical context worth considering. The last time significant tariffs were introduced, during the 2018-2019 period, the impact on inflation was relatively muted. Despite concerns at the time, the stock market continued to rise. However, the current situation differs in that tariffs are being imposed on multiple countries simultaneously. This raises questions about potential economic repercussions and whether this could trigger a larger downturn. Ultimately, for long-term investors, moments of heightened volatility often present opportunities to buy at discounted prices. While some traders may focus on short-term fluctuations, others see this as an opportunity to accumulate shares at lower valuations. The coming days will provide more clarity on how markets react to these developments. For now, investors should stay informed and be prepared for continued fluctuations. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below.